Thank you for joining this week's webinar. Let's give everyone a few more minutes to get situated before we get started on today's topic. Okay, well, let's get started. So my name is Trisha Thomas. I'm a partner here at Fourlane, and today I'm going to talk to you guys about the importance of keeping inventory quantity in a healthy state. So we're going to talk about what is negative inventory, how do we get there, and how does it impact our accounting database. Okay, so I'm going to open up. I have two files open for you guys today, because I want to show you an example of a client's file. And then I want to show you some kind of workflows and kind of things that we've done. Okay, so starting off, first I want to talk to you about what is negative inventory? How do we get there? So in QuickBooks Enterprise, negative inventory means that you have invoiced for products. So you've sold products, items, and this is specific inventory items, and we'll talk about the difference between the different types. So you have sold inventory items before we have received them in our system. Okay, so even though you can do this, so your invoice transaction can post, it does create accounting and operational problems, and those can compound over time. So I want to show you an example of what I'm talking about when I say you can post it. Okay, so if we start with the sales order, so we know in QuickBooks, a sales order is a non-posting transaction. What that means is at the time of creation and saving, there is no financial impact. This is what we call the commitment between us and our customers to fulfill a service or product. Okay, so I'm going to choose a customer. Why sales orders are very important is because when it comes to inventory, QuickBooks uses the sales order to decide on what we call available to fulfill. So you can see on the screen, you have what we call quantity on hand. This is what we would assume is in your warehouse. Quantity available is what we have available to sell. So what the database does is it takes into account what we show we have in the warehouse, what we've already did in other sales orders, and then it gives you, based on that, what your quantity available to sell is. So in this case, the database is saying you have 0 quantity in the warehouse. There's already another sales order committed for this item. So our quantity available at this time, before we save this sales order, is already a -1. So this should be our stopping point on invoicing for this product, because we don't have enough to fulfill this sales order as well as the sales order that's already been saved. So this should be what we would call trigger point to say we need to reach out to our purchasing team to reorder so that we can fulfill this order. But I want to show you guys that I can, so it will let me save it, and I can what we call fulfill it, meaning I'm going to invoice for this item. I'm going to invoice. And you see, I still got another warning, and it says, just to let you know, you do not have enough to fulfill this. So again, another warning, and I'll show you where we set up these warnings to let you know we should not be doing this. Okay? I'm going to go ahead and do it because I want to show you guys that the system will allow us to do this. Okay, so when I save this, because this is an invoice type, this is the financial impact. So this does affect reducing our quantity on hand, moving our value from our balance sheet to the profit and loss. But here's what happens. When we save this item, go ahead, pick my warehouse. So a couple of things. So when we save this item, because we had not done receiving first, there's a couple of issues that happens. One, our inventory valuation report becomes inaccurate because what happens is QuickBooks Enterprise, as default, uses average cost for its inventory items. When inventory goes negative, the database has to guess at what that item cost was temporarily. So it could use an outdated cost or a zero cost because receiving hasn't been done first, so it does not have an accurate average cost. So what happens is when we invoice, the guess of the cost that the database uses is moved to our profit and loss under our cost of goods sold. Then when we actually do our receiving, so our purchase and receiving of this item at a later date, now the database has to go and recalculate that prior transaction retroactively. So again, what this does is now it has to re-estimate the inventory value. Oh, goodness gracious, it froze my screen. I apologize. It has to re-estimate what the inventory value was. So that's going to cause fluctuations unexpectedly. It's also going to change that cost of goods sold. So when you think of looking at reports such as your gross margin at your P&L or your sales report for those gross margins, those are going to change. And again, it's doing in the backend database. So nobody knows that. Okay. So I want to give you another example. Take me back to my home screen. So if we sell 10 widgets before we receive them. So we know proper workflow is I can create that sales order. So if we come back and we'll do the same example again, so I can show you guys what should be happening. So choose my customer. I'm going to choose the same item so that we can use that example. And again, because I already saved a sales order, it now shows my quantity available is -2. Okay. So we'll go ahead and we're going to say that we're going to order 5. Okay. When I save this, proper workflow would be if the person creating this is not the person that purchases, then that person needs to let the purchasing agent know. We're going to use a scenario that we do it all, wear many hats like a lot of us do. So we're going to go ahead and we're going to create a purchase order. Okay, the purchase order is when we are reaching out to the vendor saying we need to reorder product. We need to fulfill our customer's order and we need to reorder product. Okay, if I'm going to use an example, I always tell my clients the more data you have in here, the more it's going to do work for you. So I'm going to show you an example. Let me choose that item again. Okay, so kind of talking about item setup. This is an inventory part. What this means is I purchased this item for resale. I want to track my asset value and quantity at time of purchase and of course sell it. There are other item types, assembly or non-inventory, but what we're focusing on and what causes negative inventory is inventory items and inventory assemblies. Okay, so when we do an item setup, we set up a cost. This is what it would be the time of purchase. Now, because QuickBooks does use average cost, it can change. Instead of using the default cost, it's going to use when you actually purchase it. Okay, of course, this is what we sell it for. These are our GL accounts. So this tells the system when I sell it, move my value of my cost to this cost of goods sold account, move my revenue for the sale to this account. And then this is our quantity and value. When I purchase, increase this material inventory. And of course, when I sell, decrease it. Okay. Now, when I was talking about adding more data, if I add a preferred vendor, meaning who do I order this regularly, then when I create this purchase order, it will actually fill in that vendor for me. Okay. Coming back over here, if I enter in a global reorder point, what this will do is under my inventory reporting, and I'll show you an example. It will actually help me keep product in stock. By telling it I want to keep a certain number, it will tell my purchasing agent based on the activity and those sales orders when we need to reorder to make sure we can always fulfill these orders. Okay, so coming back to my purchase order, the order that I created the purchase order off of was 5, but we know we already had 2 that we wanted to fill. So I'm going to go ahead and we're going to say we're going to order 10. Okay. That way I can fulfill the customer's orders and I have a little bit in stock. The same as a sales order is non-purchasing, so is a purchase order. It means at the time of creation and saving, there is no financial impact. What this is a commitment between our vendor saying that we're going to order this. Let me choose a vendor. Okay. So workflow would be, we have our sales orders for this item that we need to fulfill, and now we've created our vendor commitment to say we're going to reorder 10 of these. That does not mean that we can now go and invoice, because at this time, all we've done is reach out to the vendor to say we want to order them. We would not fulfill this order until we actually go and receive the inventory. Receiving the inventory is actually increasing our quantity and value so that we keep that healthy database. So we're going to come back to our purchase order and we're going to receive it. So I'm going to create an item receipt. You can see we didn't have to fill anything in. It took everything that we had. It actually grabbed the wrong one. I hit the wrong button. Let me delete this guy and let's go back. So what happens is when you have multiple open purchase orders, oh, there we go. Grab him again. Does not want to play nice today. I do a lot of ins and outs showing clients what to do and what not to do in their data files. And so sometimes I've kind of done a little too much. So we're going to do it a different way. We're going to grab it from our purchase order. Here's our purchase order. I'm going to see why it doesn't want to play nice. This is what we do. This is why we do these, so we can show you guys real life what happens every once in a while with those databases, why we want to keep it clean. Okay, well, we're just going to go. Okay. Okay, so we're going to go ahead and save it. I want to hold up just doing all this research. So this transaction of actually creating, I'm going to take you back here. I like to show the home screen because it really shows you what the workflow should look like. So creating the purchase order and then receiving is what should happen to keep our database healthy. Now I want to show you an example of a client's file that didn't follow those workflows. Okay, so this client reached out to us because they are frustrated that they can't trust their numbers. They can't trust their financials. Nothing ties out. They're running into they'll do something today and it's gone tomorrow. So those are red flags that tells us that the database has been damaged. So we kind of start digging into the why. So the first thing that we do is we look at 2 important reports when my client says that they manage inventory. So first, I look at their balance sheet. And I've told you guys in the past, when you run your balance sheet, all the sub-accounts should always tie. And what I mean by that is if I run the open accounts receivable report, the balance of that report, the total, should equal the same total on my balance sheet. Well, it's the same exact thing with inventory. So when I run the balance sheet and I have my inventory values, I should have the exact same total when I run what we call the inventory valuation summary. And how I got to these reports is under reports, company and financials. That's where you find your balance sheet. And then for the inventory valuation, it's same thing, reports down to inventory, and it's called inventory valuation. And just depending on what you have activated in your file, in this file, we've got serial numbers activated, we've got multiple sites, you're going to have a lot more reports. For this example, I'm focused on the inventory valuation summary because that is the global report, meaning rolling up all of my data for my quantity and value. Okay, so when I look at this balance, it should match what is in my balance sheet. I can tell you it does not. In this file, it does not match. The next report I go and look at is what we call our negative inventory listing. This report is found under reports, under inventory, and under the very bottom negative inventory list. So this report shows us, as of today, these are all of the quantities, all of the items, and all of the quantities that are negative. So this is my first indication to not only do we need to fix this issue, but we need to go through some workflow because this does not keep my database healthy. Okay? So this is kind of normal. If you guys go run these reports in your file and you see this, I want you to reach out to me. We can definitely dive in, take a look at what's going on, and build you out a process to kind of got to clean it up. But it's not just cleaning it up. We got to take a step back and review our workflows of why this is happening, because this affects everybody. Okay. So when I say that, what I mean is financial reporting becomes unreliable. Negative inventory affects our profit and loss because we don't have a true COGS. It affects our balance sheet because if you look at this, for example, let's just look at a couple of negatives. Let me show you an example. So here is, I'm just going to use this negative 12. Now this is small, but I've seen bigger. It is showing that I have a negative value. So if you think about that, it is understating what our actual value is in our warehouse. So this is not a trustworthy report because we know our asset value has to be higher than a negative number. Okay. This also affects job costing. So if you think about, if you are tracking job costing and we come and run, for example, our budgets versus actuals, you can't trust the actual cost for any inventory items if we're running negative inventory because it could possibly not be a true actual cost because it's going to use what it knows. It could use an old cost. It could use zero cost. Okay. That same thing for our sales profitability. If you think of, you want to run a sales by item summary, you want to see what is your true gross margin on your items? Well, if you don't have a true average COGS because of negative inventory, then you don't have a true gross margin. So how do we determine, are we selling our items at a profit? Okay. So when people say to me, well, negative inventory doesn't really matter, it doesn't really affect everything, I want you to understand it not only affects operations, but it also affects the leadership team that is depending on these financials to make decisions for the business. Okay. So you think about, this is really going to affect month-end close or tax prep, year-end tax prep, or if you have an audit, need to provide financials to the bank. If we are constantly having to go back and fix our negative inventory and it's constantly changing our financials, then how are we going to depend on those when it comes to these important things such as audits and filing year-end taxes? Okay. So kind of, I want to show you guys some kind of things that I want you to start looking at because I want you to understand that when that database gets corrupted, you can't just fix it. That means that I can't today go and say, I'm going to clean up the negative inventory today. Okay. Because you're cleaning it up as of today. The negative inventory is still in your file from the time it went negative. And so what I mean by that is if I caused negative inventory on an item 2 months ago, and I only do quarterly reviews of my inventory, Then for 3 months, that inventory item was negative. And then I'm going to fix it on month 3. So month 3, at the end of the month, it's corrected, but it is still negative for the 2 months before that. So that is still in that database. So when we talk about cleaning up negative inventory, we're not talking about cleaning it up as of today. We have to clean it up as of the time that it went negative. Okay. So the things I want you guys to start looking for, because I want you to think about as part of your month end close process, if you're managing inventory, this is one of the most important things that I want you to focus on. Not only our usual, making sure we've invoiced everything, we've paid everything, there's nothing needs to be written off, but inventory needs to be a big focus for month end close, because I don't want you to let it go by months and months. And then you get into a situation such as this client that, because they have continually allowed negative inventory to remain in their file, they're now in a situation where their file is crashing. They can't depend on the data because it keeps disappearing. And now we have to take a step back and we have to repair the database or start them a new file. Okay, so a lot more headache if you wait and don't make changes in your workflows to understand not only what's causing it, but how do we change it? How do we go back to having our true good workflow where we can still create our sales orders, because that's not financial impacting. We can still do that, but we can't fulfill them, meaning I can't invoice them, even if it's in my warehouse, even if I see it. If our accounting file does not see it, meaning it has not been received, it is not okay to invoice. So we need to create a sales order. Then we need to purchase and receive our inventory before we create our invoice. Okay. So I want to show you some kind of ways that you can help those warnings in case you guys don't see this. So if you go up to edit and you go down to preferences, this, and we go down to inventory, items and inventory, you want to check the company preference. Right here in the middle is our section on how do we want to manage our negative inventory. So if we do not have enough inventory to fulfill the order, so we have when the quantity exceeds the quantity on hand, what that means is it's not going to take into account any sales order. It's just going to say you have not received enough to fulfill this order. Okay. The other one is that if the quantity I want to sell exceeds the quantity available, so that is going to take into account all previous sales orders and assemblies that are waiting to be fulfilled for this item. And last but not least, we have do not allow negative quantities. So what that means is that if you've, kind of exhausted all things and your team isn't open to the change and they will not stop doing this, you can change it to say, I'm not going to allow you. So what that means that you cannot create an invoice. It will not allow you to create an invoice until you have fulfilled that item with receipt. Now, it's kind of a hard line because there is no if, but what about this item, or just as it's across the board. So before we get to that, we definitely want to see if putting these in place and kind of working with the team on best practices and changing our work, if the warning will, kind of stop the problem. But if not, we can switch to do not allow. Okay. So best practices to prevent the negative inventory issues is on the operations side, always receive inventory before selling. Also, lock prior periods. This is very important that we lock down the periods. And what that means is coming back up here to the preferences, locking a prior period means that we have completed all of our functions for that period. We have invoiced everything, posted all the payments, we've closed out the books. And so we want to close it down so no one can make changes. So that is what we call our closing date and password. So if, for example, we're in June, if I've finished closing out May, then I would want to set this to 5/31/2026 and set a password that only the administrator knows, or select few, maybe some leadership people. But the purpose of this is so that nothing can be changed in a prior period that has been completed. Okay. Also, looking at running these reports regularly. So again, the reports that I would want you to focus on is our balance sheet. So running our balance sheet as of our close date. So if we said, okay, we're closing on the 31st, we would also want to run our inventory valuation. I don't want it run by site. I want it run by the full, what we call global, because this will capture all sites. Okay, so run that report. Very important. Make sure it is the same date range. That's always frustrating. Always, if you guys don't see this, this is your friend. You don't need to see every item. So we want to hide if there's any zero quantity on hand. Okay. The purpose of this one is we are verifying that our asset value matches our balance sheet asset value. So that's kind of step one when it comes to inventory. If, for example, this file has multiple inventory accounts, you will need to total those so that you get what your total is for for inventory. Now, you could create a header called inventory and put those under there, and then it would give you the total for inventory. But keep that in mind. You will need to total those to make sure they match. The next thing I want you to do is on your inventory side of things, run inventory and run this negative inventory listing. This is going to tell you as of this date range what inventory is negative. This would be okay, we know we need to go clean it up, but we're not going to clean it up as of today. We're going to dive in and we're going to see when it went negative and clean it up there. So you can do that a couple of ways. If you're in the inventory center, which is where a lot of inventory management people kind of hang out there. Let me just go find that item. I think it was this one, but I think it was actually at a site. So it is my anchor base. If it'll let me drill in from here. Okay, so what I'm looking at here is kind of like a transition detail. And what this is showing you is all the activity of the item. So you can see on 12/31/28, we did an inventory adjustment to get us to 9 on hand. And then you can see the ins and outs. So my bills are going to be us receiving. Our invoicing is going to be us selling. And then, of course, same thing, a build assembly would be selling, or I guess fulfilling the build assembly, which would be reducing our inventory counts. And so it takes us to -2. So what you're going to look at when you think of cleanup is when did we hit -2? Okay, so when you look at it, you can see here we hit -71 when we invoiced, and then we hit -2. So if I was cleaning up, I would want to do it before this was invoiced, because I want to trick the system to say, fix it before it went negative. Okay, so it would be a stopping point to say, hey, if we were able to sell these, that tells me that we purchased them. Where is the item receipt? I don't see an item receipt. So we go back to our warehouse to see what happened. I had a client that they were prepaying for inventory, and they were receiving as they were prepaying, and it was causing a mess. Because, of course, then when they receive it, they receive it again. Or they never got it, but they didn't have line of sight because the AP team was purchasing prepaid inventory, and instead of following the correct process, they were actually receiving the inventory when they purchased it. So we had to go through a workflow for them to understand not only the impact of what they're doing, but what would the proper workflow be to separate purchasing prepaid inventory from receiving. So you can see there's lots of different ways that inventory needs to be managed, all these different workflows, and that's where Fourlane comes in. We can help you guys understand the whys and how things need to be done and what the impact is. Sometimes we need that to kind of share with the teams that are doing, causing the negative inventory. They need to understand the impact. And then we can take a step back and we can support your team with changing how they do stuff, getting the file back to the healthy state, and then revamping your workflows so that you do keep the healthy database and good workflow so you can trust all your reporting and your accounting file. Okay, well, looking at the time, we are at time. So if you guys have any questions during this webinar, please feel free to submit them. You can do it in the GoToWebinar application. We will then collect those all and we will reach out after the session to get those answered individually. So thank you so much for your time today. I really appreciate it. Have a good rest of your week.